So, how is everyone doing? Okay, so first off, I am OVUXO, and I'm sure you should know me by now. That is, if you don't know me, I am OVUXO. So, I am not a very fluent speaker. I do not know how to speak fluently. I struggle to put in words together. So, you should try to understand, even though I try to break. Just try to understand, and maybe probably you can ask your questions in comment sections. So this is trading. And please, perhaps as I speak, just ignore every other noise you hear in my background. I have very, very noisy neighbors. So as I speak, just try to take note of certain things. I'm going to be breaking down this video into parts for proper understanding six. Maybe I'm just going to make a video, maybe like 6 minutes long or 5 minutes long. So as I said, I'm OVOXO. And I just want to show certain things about trading. And if you are going to be following me up in this new series I'm about to start, I'm going to be revealing so much secrets and knowledge that have never been found on the internet concerning trading. Trading, as you see, it is just I don't know how to describe it right now, but it is just filled with it is filled with bags of secrets. Every lines you see here, every movement you see here, they are not random. They were all pre-planned, if I would use that word. They were all pre-planned, even right from this date of 2022 down to 2025. Like everything is pre-planned. Everything. You just need to open your eyes. You guys are going to see this thing. I can tell that right from this date of 2022, Monday 31st January 2022, down to Monday 23rd June 2025. I can tell you that these guys on this particular day, they knew what price was going to be on this particular day. Like everything you see here is not random. Everything you see about trading is all random. Whatsoever you learned about trading in the last few months or years, everything has been lies. If I'm going to use that word to you, everything has been lies and lies and lies. Like they just taught you those things so that they can take away your money. And as your knowledge of trading grows, you are going to gain new insight into new things. You are going to gain new insights and you are going to have more understanding. If you come across this video, I want you to just have an open mind about trading, that trading is not what they've been telling you it has been, or it is not what you think it has been. It is something totally different from what you know it to be. Trading as Trading is crazy, if I'll use that word. As above, so below. Like it is a very scary place. I'm sure if you've watched that horror movie, As Above, So Below. It's a very yeah, trading is scary. Trading is crazy. It is not what you think it is. Trading is very, very, very crazy. And it is not random. That is the truth that I don't know if you are going to hear from anywhere, but trading is not random. Well, as I said, I'm not a fluent speaker. I try to, and I struggle to put words together. So I just want to try to understand me, right? I'm a very nervous speaker. I could get nervous at certain times, and maybe I could not speak in a way that to make people understand what I'm trying to say, but just try to understand what I'm trying to say at the same time. So I am not the iced tea guy, right? Iced tea guy he reviewed some part of it. He reviewed some part of it, but I can tell you that I did not review all. I know you must have been watching ICT videos, you must have come across ICT videos, Michael, J. Augustine. I'm sure you might have been watching his videos and all. He has reviewed a lot of things, but I can tell you that he did not review all. And also for the sake of this video sake too, right? There are certain things that I'm going to be telling those in the private section. that I am not going to be revealing out because I don't know. He also says that in a lot of his videos that there are certain things not allowed to say, blah blah, and the rest of that. And same here, because of things I've noticed that I can tell that price is not random. There are certain things I'm going to be saying, and there are certain things I'm going to be saying to just those in private. You understand? Like, for example, I'm going to things like knowing that price is not random, price is fixed, and price is pre-planned. Those particular information I'm going to be revealing to those in private. You get, and I don't know if this information should spread out and the market makers should know that someone knows something like this. I don't know how they are going to feel. Well, this first section of the video is just talk before I dive into the main aspect of it. But I'm just trying to make it serious to make it interesting. You get, like I said, I'm not a good teacher. I'm not. Okay, I can say I'm a good teacher, but I am not a fluent speaker at the same time. I struggle to put words together, but just try to understand what things I'm trying to say. So this is let me just dive straight in. Let me just dive straight in, and I'm going to be focusing firstly on Fibonacci. Fibonacci is going to be the first thing I'm going to be talking about. Fibonacci, the first thing I'm going to be trying to expose, I'm going to try to be exposing on my videos is Fibonacci. So Fibonacci, let me just like try to point out something concerning other indicators, like all of those moving averages, all of the Bollinger Bands, the what will I call it? The RSI and the rest of them. I see them nowadays, I see them as noise. All those volume and all those things, I see them as noise. They are not the real thing. Like these guys want us to know, the creators of all of these charts and the banks that control price, they are not the real thing. Maybe the moving average can just tell you that okay, when there's a change in this direction and when it goes across the 50 and the 200 EMAs, you should know that the trend has changed or it's an uptrend, or when it goes below it's a downtrend. And it's just meant for you to just chase price. I see all those things as just things that are meant for us to chase price, not they are not the real thing, right? But I see Fibonacci as the real thing in the market because Fibonacci is based on percentages, and these guys they move prices based on percentages. They know what particular percentage they want price to run to on this particular day, and then they also know what percentage they want prices to be on in particular quarters, and also they also know what percentage they want prices to be on. Probably they want it to have moved 200% in the next 2 years. They majorly work on percentages. That is why I buy more Fibonacci, and I would always teach more on Fibonacci, and I'll always expose more Fibonacci, right? There was just only one thing I took from Michael's videos, Michael Jordan's thing. There was one thing I took from his videos, and that was one of his series. I did not really, really dive into his videos. Maybe I just did some bits of the 2022 models, and then I just got not even all, I just did some bits, and then coupled with my own vast knowledge of trading, I just put one and two together, and then I just put two and two together, and then I made some mind-blowing discoveries. Mind-blowing discoveries, not just any kind of discoveries, but mind-blowing discoveries. So, excuse me. So concerning the Fibonacci retracement is a tool, like I said, it's a tool that shows percentages and probably reversals, let's say possible reversals, and the next percentage is like they want the prices to run on. So I'm going to be showing out my Fibonacci and how I use my Fibonacci tool. So from now we see that this is the end of a trend down to this side. It is higher high again. There was a lower low here. There was a higher high. Broke down into this. Broke down below the lower high. made on that higher. Okay, after this higher high, now broke down below this lower high. Now we can see that there was something just like a trend in this area, range in this area, or a resistance in this area. So in my own instance, I would see that this is where the resistance started from, right? Okay, let me point that out first off. Let me point that out. So, like I said, this in my own instance is where the resistance level started from. Just that simple. So, this is how I draw my Fibonacci, and this is how to place your Fibonacci retracement. Now, let me show you. See this point where the rise starts from. This point where the rise starts from. Not even this low. Not even this low now. I'm not using this low now. I am using this point where the rise starts from to this right, to this point where the resistance started from. Now I'm using this because this shows the eyes. This is the particular open. This is particular open, and this right here is the particular close after the open, high, low, and then the close. I'm sure you understand open, high, low, close in candlesticks. So this is the open right here, and this is the close right here. So I just basically look at that areas because now the market makers, the people that control this price now, what they actually did was that they opened the markets in this particular price. The candlesticks are just noise. Looking at the wicks are just noise. Sorry, the wicks now they just use the wicks as noise, and then they opened in this particular area, and then they closed in this particular area. So now in their open and their close, what percentage do you think they want to retest to? That is just the idea behind this. Okay, now they want to retest because the open and the close is the main issue of the day. Where they open the market and where they close the market for the day, these are the main issues of the day. So I'm having the idea that they want to retest a particular percentage of where they've done open and they close. But in this instance, this is the weekly time frame, and this is the week, these are weekly time candlesticks. So looking at these weeks, what percentage, if they want to retest 50%, what particular area would they want to retest? So that is the idea I'm having right now. If they want to retest 60%, that is the idea I'm having right now. But for the sake of this, the structure of this teaching, I'm going to be coupling it with ICT for those that understand ICT trading strategy much more. Because I'm not just going to be talking about ICT right now. I'm going to be revealing much more than ICT has revealed. I know it just talks about fair value gap, and maybe if you want to be keen on those, you can use those to make profit for yourself. That's fine. But if you want further understanding of why certain things work that are not being reviewed, that is where I come in. Understand? So back to this, I'm going down to the main issue. So I put my Fibonacci, which is the 100% on that open. Then I drag down to this close, like I showed you. And then I drag it out in time to understand what's actually going on. So this is it right here. Like you always know, like I always say, the 61% is the golden zone for proper understanding of the market. 51% is the golden zone for Fibonacci. That's where we take our entries on. Probably if you're using trading on the long time, maybe you can put your stop losses below the 100% or the 79% retracement. So it's ICT. If you understand ICT with the Fibonacci, you can also see that in this weekly time frame, there was a fair value gap right in this area, and dragging it out in time, we can see that the fair value gap was respected is the Fibonacci. Can you see that? Can you see it clearly? It was properly respected with Fibonacci. They came to 80, 50%, retraced maybe to 38%, and then they dig deep into the to touch the 61% into the fair value gap, retested that level, broke out, came right into the fair value gap in this level, and then you can see the run and then continuation. This is just it in a nutshell. I'm going to be going further in the next series, but this is just introductory aspect.